Prologis stock, ticker symbol PLD. This stock is down 18% year to date, which is quite a lot compared to the S&P 500, which is down 11% year to date. One of the reasons why people love PLD stock is because of the dividends. But how about the future of this business and what about the fundamentals? In this video I'm going to show you real quickly what Prologis does, the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Prologis do? They develop, acquire and operate around 1 billion square feet of high quality industrial and logistic facilities across the globe. Prologis is organized into 4 global divisions: Americas, Europe, Asia and other Americas, and operates as a real estate investment trust. So when we check the latest quarterly report, we see that they have more than 4,700 buildings with 1 billion square feet, of which is 30 billion located outside of the US. 82% of the NOI is coming from the US, 10% in Europe, 5% in other Americas and 3% in Asia. When we check the revenue breakdown, we see that 87% of the revenue is coming from rental revenue, and 13% is coming from strategic capital revenues. Rental is up 7% year over year, while strategic is up 20% year over year. The core FFO is up roughly 10%, and we already see that dividends are well covered with the FFO, sitting at 1.11, and dividends at 0.79, so this comforts me a lot. And in this graph we see that the core FFO is going up in the long run. Q2 is up 10% year over year, so this looks also quite good. The AFFO is nearly flat year over year, so this is a number to keep your eye on. When we check the 2022 guidance, we see that we have a low net earnings of 5.15 to a high of 5.25. The core FFO is at 5.14 to 5.18, so this comforts me again. This is covering the dividends very well, so I really like this guidance. Next to that, the occupancy is also very good at 97%. So I really like that as well. And in this graph we see that all regions are very high and only Asia is at 95%, which is still pretty okay. And with that being said, let's check the historical returns of this company. I decided to add the S&P 500 as a benchmark, and next to that some of the major competitors, which are DRE, Stack and Colt. On the 5-year chart we see that PLD stock is up 153% including dividends, and easily outperformed the S&P 500, which had a return of 93%. DRE is at 160%, Stack is at 57% and underperformed the S&P 500, Colt is at 97% and that's pretty much the same as the S&P 500. On the 1-year chart we see that there are only 2 stocks with a positive return. PLD has a 5% return and DRE has a 30% return. The S&P 500 had a minus 1% return, and both Stack and Colt are at minus 14% return. On the 6-month chart we see that PLD is at minus 3%. The S&P 500 is nearly flat, DRE returned 22%, Stack a minus 10%, and Colt a 13% return. So to be honest, that's quite a difference right here. On the 1-month chart we see that PLD stock has a 14% return. The S&P 500 a 12% return, DRE a 15% return, Stack a 15% return and Colt is nearly flat. So does this mean that PLD stock is a buy right now? Let's find out by checking the fundamentals of this company. But first, if you made it this far into the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so help me achieving this huge milestone by giving me a subscribe. In return you receive similar analysis to this one every week. So let's continue by diving into the fundamentals. Prologis is a 99 billion market cap company, which makes them one of the bigger REITs out there. PE ratio is at 26, which is significantly lower than the 5-year average, so I really like this. 12 trailing month revenue is at 4.8 billion, and in this graph we see that it went up really nice and steady, so I really like this part. The net income is at 3.72 billion, which gives us a profit margin of 77%, which is really high, especially since it's higher than the 5-year average, so I really like this number as well. But when we dive into the balance sheet, we see that they had an other income of 2.72 billion instead of the average of 1 billion in the past 5 years. So probably they sold something off. So this 77% is a bit diluting right now. Next up is return on assets, which is a bit low, at 4.2%, which seems maybe a bit low, but this is very common in this industry. Return on equity is at 11.3%, which is very nice. And the most important number here, return on invested capital, is at 5.8% and also significantly higher than the 5-year average. So I really like this number. It's very common for this industry to have a lower ROIC, so I don't blame them for being below the 10% minimum. Another thing that's very typical for REITs is a higher debt, because they use this to grow the business. Right now, debt is at 18.5 billion and operating cash flow is at 3 billion. So they can't pay down a big chunk of their total debt right now, which is something I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt, buy back shares, do acquisitions, pay dividends and research and development. In this graph we see that free cash flow has gone up and down quite a lot, which is very common for REITs. But still, I prefer companies with a bit more consistent free cash flow growth, so definitely keep an eye on this number. Next up are the dividends, which is one of the things people love about PLD. Dividend yield is at 2.31%, which is pretty okay. Annual payout is at $3.16 a share, or $0.79 each quarter. Payout ratio is at 56%, which is very nice. It means they have 44% left in cash to pay down debt, buy back shares, do acquisitions and all other things. The 5-year growth rate is at 10%, which is very high for a REIT in general. They grew the dividends for 8 years in a row, so overall I really like this dividend scorecard. To me, this is a great dividend growth stock based on these numbers. The next part will be about the fundamentals of PLD versus their major competitors. I decided to include DRE, Colt and Stack. And we see that PLD stock is by far the biggest company in terms of market cap. Stack has the highest revenue compound annual growth rate and PLD is at the second spot. Both net income and free cash flow is growing in higher amounts at DRE and Stack. So they really are the winner here. But keep in mind that it's harder to grow a business when you are already the biggest company. Stack has the highest gross margin, but DRE has the highest net income and free cash flow margin. All companies have a lot of debt compared to the cash position, so to me there's no winner here. And now the most important part for most people, the dividends. Right now Stack has the highest dividend yield of 4.28%. Payout ratio is really the lowest at DRE, but PLD has the highest dividend growth rate. Stack has increased the dividends for 10 years in a row, which is the highest here. So overall, PLD didn't really did a great job as it seems, but in most cases they were at the second spot, so it's pretty okay. Last part of this video will be about the 3 price targets that I created for PLD stock using the Everything Money software, where I fill in a low, mid and high assumption. Since PLD is a REIT, this calculator might be not as accurate as normal. So this is something to keep in mind. For your revenue growth I fill in 5, 10 and 15%, which are the average of PLD. For the profit margin I'm aiming for 46, 50 and 54. Also the average, and I'm ignoring the 77% average for last year, since this was a bit diluting. For the free cash flow margin I'm filling in the average in as well. And for the PE ratio and price to free cash flow I'm aiming for 22, 23 and 24, since this is a REIT. You might want to use different numbers here than usual. For my annual return I'm filling in 12.5%, which is my margin of safety, since I can get an easy 10% return with owning an ETF. Right now PLD stock is at $134 a share. I hit analyze and we see some green numbers, but we have quite a big range. The low price target is at $52 to $65. The mid price target is at $85 to $106 and the high price target is at $140 to $171. So if you believe these high numbers, then PLD stock is a buy based on this high assumption. To me, it feels that they are in a range of $100 to $140. It means that there is not a lot of potential in stock price. My final conclusion on this stock is that I really like the steady and consistent business, but the valuation is a bit difficult. I think dividends are really great, so from a dividend perspective, I think PLD stock is definitely a buy. For now, I'm adding them to my watch list. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.